Hello, YouTube. It's a happy weekend. I hope that you guys are doing well. Well, on my side, I'm observing scalp index. Well, we are looking at the contrarian trade setup on the 1 hour time frame. We are finally above the 7,690. It's quite interesting how we got up there. It finally got up there after a long, drawn out hunt for sell side liquidity. Well, if you look at the price action from last Tuesday, since last Tuesday, we've been hunting for sell side liquidity. We dropped down below here on a Wednesday, right? We left the relative equal highs up there. And ever since then, we've been going lower again, attacking the sell side liquidity of Wednesday. Well, ever since we got below here, we printed this particular low, the 10 a.m. And the 10 a.m. low was the actual low that I was looking for. I was looking for the 10 a.m. to get swept in the 10 a.m. our last trading session of the day on Friday, and we never got there. We actually came down to sweep the 7,635 Wednesday's low one more time. We never actually got below the 10 a.m. low that I was looking for in that PM session. Well, if you look at the PM session fair value gap that I used to frame a short setup in the PM session, well, today on the Friday, we violated that particular structure and we changed bias. We actually went to the 1 hour time frame fair value gap to print the buy side liquidity relative to this particular high here, the London high of this particular day, right? So after we printed the relative equal highs, we came all the way down into the very same PM session, fair value gap, and we supported on it and bolted higher, attacking the buy side liquidity. Now, these are the type of trades that I am interested in. As you can see, there is no retracement whatsoever. It just keeps on going. 5 years ago, I was in a trade, trading this contrarian trade setup, but I did not know that I was trading the actual contrarian trade setup. It was my very first time attempting to trade scalp index, and I did not know what the fuck I was doing 5 years ago. But here we are. We are now talking about the very same trade. Yep, beautiful people. This is the contrarian trade setup. I was in that particular trade 5 years ago, and I did not understand what I was doing. My friend, he came over to visit me 5 years ago. He usually did visit me, and we would check each other's trading because we were both new in the markets. We did not know anything, so we would just share knowledge as to what we are looking at in terms of our progress. And I showed him a step index chart. I was in deep blues. I was in a trade, something like this. It looked something like this. It was rushing, going up. All right, it was going up against the trend. Right, as you can see, we have been bearish for July's price action. So we went in the counter trend. We were going counter trend, and that's what I attempted, just to go counter trend. And my friend came over. He asked me like, dude, you're in deep blues. What the fuck did you do to enter into this trade? And I did not know because I was a beginner. I took advantage of the contrarian trade setup, but I did not know that this is the contrarian trade setup. Today we are discussing that model, right? So my discussion since the Contrarian trade setup, I've been taking you to a particular framework where we have a key level with the buy side liquidity pool that has been printed here. Do you see that it's been left out open, the 7,690 right here? And we had the Wednesday's low, which is another key level. It's sell side liquidity. So we came all the way down. We utilized the 1 hour time frame as an inversion fair value gap. We respected that to the downside and we went lower to attack the sell side liquidity Wednesday's low. That's a key level that we attacked. Now, since we attacked the sell side liquidity of Wednesday, what we are left with is the buy side liquidity. This is the framework that ICT uses every single day. That guy is utilizing this very same framework. It doesn't matter what you trade. Honestly, it does not matter what you trade. Whether you're into gold, you're into currencies, whatever it is that you're trading, if you apply the very same framework that I'm outlining here, then you're going to have a good trading career. Because this repeats. It repeats. If you look at any chart on any time frame, this framework, it repeats. If you are bullish, you're going to see price action gravitate to the sell side liquidity first, right? So that's what we did down here. We attacked the sell side liquidity utilizing the 1 hour time frame fair value gap as a means of a resistance to go lower and attack that sell side liquidity. Now, I was not aware that we are going to, utilize the 1 hour time frame fair value gap as a resistance as of Friday's price action, but price actually used that fair value gap as a resistance. So sometimes I do read it wrong, good people. I do read it wrong. It happens. I'm human. I do make errors, right? So I was looking for that 7,690 ever since that particular Wednesday's low was printed. But price said, no, buddy, we need to take out that Wednesday's low first before we can head higher. And that is what price action actually did. And you actually saw me in the PM session attempting a short trade to get below the 10 a.m. sell-side liquidity pool. Now, price action said, no, sir, that is enough of sell-side liquidity. We are now changing our bias. We created a market structure shift. See that? Beautiful market structure shift in the opening hours of the day today on a Friday, right? So we actually opened with this fair value gap after we've created a market structure shift. So this is a 1 hour time frame inefficiency here. So let me zoom in just to make sure that I have the coordinates of that inefficiency in place. So it has a volume imbalance right there. Normally I would draw my fair value gap like this. But since we have a volume imbalance, we're going to grab the entirety of the volume imbalance. Okay, so there it is. It looks something like that. Okay, so in the opening hours, we created this huge rally attempting to get inside of our 1 hour time frame fair value gap. Now we hit the consequent enrichment of that. We printed relative equal highs here, right? And we came down rushing lower into the fair value gap. Now this is where you could have attempted your beautiful long opportunities. And look at it. At what time did it rush to the upside? That is the 6 a.m. beautiful people. That's the New York. In New York, that's when you would attempt your beautiful long positions inside of this fair value gap. And you would need the 1 minute time frame as well, because those are 1 minute time frame fair value gaps that support price action into the upside. Now we just created this market structure shift with displacement to the upside. That is wonderful. This is an hourly time frame. So let's head over into the 1 minute time frame so that we can actually see our fair value gap on the 1 minute time frame. So let's head over to the 1 minute and see what we got. So as you can see, we have many ads that are popping up in TradingView platform. It's quite insane, man. Let's unzoom a little bit. You can see it's rushing. Oh man, I wish I was in one of these trades, man. So I'm gonna take out the 1 hour time frame inefficiency just a little bit and see what we got going on here. So this was yesterday's trade utilizing the PM session of the 24 July 2026 opening range fair value gap as a resistance with the Wednesday's London opening range fair value gap as well. We use that to go lower and attack 7,635 Wednesday's low one more time. We couldn't get below the 10 a.m. Now there is a bullish order block here. I did not annotate that. We hit that perfectly, rebalanced all of this huge price action that was going up. We actually came down to hit the bullish order block. Right after hitting our bullish order block, we then rallied to the upside. It's quite interesting how it came up into that 1 hour time frame fair value gap. Now that 1 hour time frame fair value gap is a magnet. It's a new day opening fair value gap. It's going to draw price into it or away from it, right? So we came up here to print relative equal highs, and you can see this high and this high, they are relative towards each other. Now this high and somewhere here, these are relative equal highs as well. So that is London session buy side liquidity printed inside of the new day fair value gap on the 1 hour time frame. It gravitated lower, going all the way down into our PM session fair value gap. Now in this period of time, that's when you could have attempted your bullish scenario, right? So how would you have participated in that? Well, of course, you would wait for the 7 a.m. 7 a.m. is somewhere up there, right? 7 a.m. is somewhere here. So let's zoom in into that inefficiency and see if price action had a help from the 7 a.m. in going bullish. So of course, you would have to fight with price action to get your fill in this consolidation. But obviously, there is an easier way to do it. We have price action since the opening of 6 a.m., right? It went up, creating a market structure shift. And as it got above the London session fair value gap of Wednesday, utilized it as a support. Now, this would be how I would have attempted this beautiful long trade right here. And I would have my stop loss at 3 points. 3 points is somewhere here, right? Just below the PM session fair value gap. This is when I would not want to see price action coming back into the PM session because we had already rebalanced that inefficiency. So since it is a balanced price range, there is no need for it to come back into the PM session fair value gap. So utilizing the London session fair value gap as a bullish scenario would be very wise, honestly. So here is our 7 a.m. Okay, 7 a.m. we got the opening range fair value gap. Let's see where it's at. So 7 a.m. we begin here. After 7 a.m. do we have an inefficiency? No, we do have a volume imbalance in here, but we don't want that volume imbalance. So where is the inefficiency? Let me zoom in a little bit so that we can see. We don't actually have an inefficiency up until here. But as you can see, we never came back into that inefficiency. So what do we call that one? It is a breakaway gap. So breakaway gap in New York session is quite insane, guys. It's quite insane how price was actually rushing to get to the buy side liquidity pool up there. So if you can see the fair value gap low right here, what is associated with that fair value gap low? Well, we have this down candlestick, right? Is it a down candlestick? Because we opened right here. Actually, let me see what we can do with the candles, because these black colors are getting into my nerves. I can't see where price is actually. Okay, we actually have a bullish order block here. I just changed my colors just to see the down candlestick here. So in a bullish market, down candlestick should do what? They should support price action into going up. So this is the bullish order block that price action actually utilized to go higher, because it did not want to get into the opening range fair value gap. Okay, so the highest form of a bullish order block, the highest quality of a bullish order block, is associated with a breakaway gap. So the next down candlestick after our breakaway gap. Now our breakaway gap is in gray. Okay, so the highest form of a bullish order block, you're going to have the breakaway gap left open. Okay, we don't want to see price action coming down here. So down candlesticks should support price action into the upside. So I'm gonna take the opening price of that. See that? We hit it here, and we also hit it right here in support with the 1 hour time frame fair value gap low. This would have been a beautiful long opportunity, and see how it rushes to the upside. See that? It's rushing. Beautiful scenario here, man. Honestly, wow. That's what I've been saying the entire day. Wow, Stepanix. Wow, man. Look at it. Rushing and rushing into that buy side liquidity pool that I was actually looking for. So we are way, 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 way above our fair value gap of the we are way above the opening range of New York session. So there's no way that price action could come back there to actually give us a support. But if it actually came back into the 1 hour time frame inefficiency, maybe like in the coming next days, if it could come back and treat that as a support, then I would actually be all over that. I would be all over it, right? If it actually came down there. So this is why I don't trade support and resistance, because many people would be looking at that key level at 7,690 as a resistance. If price action were to come back, they would treat that as a support. But no, we have a deeper level, the 1 hour time frame, new day opening fair value gap. So that's what I would actually utilize in terms of a support to go higher. Now we still have the 15th of July price action as a draw on liquidity. So I think that's where we are going, since we are above the 7,690. I think that price action is going to go all the way up. So now I have a bullish bias. That's what I'm going to be working on. With a bullish bias, I'm going to be ignoring bearish setups. So until then, good people, this is it for me. Peace.